Nolan, very good to see you. We're going to talk through the question, are you tax ready for retirement? I know this is a conversation you have with clients all the time. Taxes, of course, don't disappear in retirement as much as we would want them to. In fact, understanding your tax implications becomes even more important. So let's talk through 4 questions that you should ask your advisor before retiring. The first one, how will my tax situation change once I retire?
Thanks, Erin. This is a great place to start. Everybody really needs to take a look at taxes as they retire, and how it might change is a big question.
Mhm.
Um, it might be important to maybe take a look back at historic tax brackets at some point and look through. We have a variety of ways that we are taxed, but basically, once you do decide to retire, your tax situation changes mostly because your income source has changed. You instead of having W-2 income or payroll income, you have income from Social Security and income from pensions or IRAs or Roth IRAs, and those are all taxed at different rates. So, that tax brackets that we brought up right there, that kind of helps you see, this is maybe how much I'm going to be taxed based on my income amounts. But when you retire, that taxation may change based on the sources of those incomes.
Mhm. So that segs into the next question then. Are there strategies to reduce my tax liability in retirement?
Yeah, and this is where a lot of the financial planning comes in when you turn 55, 60 years old and you actually have access to a lot of your IRA or 401k money. The strategies we talk to people about as far as reducing tax liability is making sure that you have an adequate balance between IRA and Roth IRA money,
Mhm.
or making sure that you have a variety of funds between retirement accounts and non-retirement accounts or taxable accounts. So there are strategies. It usually involves being proactive, taking some steps ahead of time with some of your money. And we can get into maybe 1 or 2 of those in just a moment.
Yes, no, my next question is coming because we've, of course, talked many times about Roth conversions, but a lot of people want to know, should they consider that Roth conversion before they stop working?
And a Roth conversion, for those unfamiliar with it, it is that step of taking money from an IRA and putting it over into a Roth IRA. The main benefit of that is the money's never taxed again, but
Mhm.
the main drawback is that you pay taxes right now on that money. So, considering a Roth conversion before retiring, when we're talking about doing this, mostly what we're looking at is historic tax brackets and where we are at now compared to where we have been historically. If you look at the top US marginal tax rate throughout time, we're pretty low now compared to where we have been in the past. There are certain government actions going on right now that nobody's really aware of what's going to be the end impact, but there's been a lot of stimulus money issued. There's constant repayments that we have to do on that debt. So, the taxes, I don't know, they could change quite a bit over time. So
Mhm.
maybe considering right now while we're in low tax brackets could be a proactive way to look at it.
Mhm. And you were talking earlier about, figuring out how to turn your savings into an income stream. That is where we start talking about your withdrawal strategy. You need to know, what are the tax implications of withdrawing from my various accounts?
Yeah, and this is where we really try and look at making sure that you have a good balance between the 3 types of accounts that you have access to. With your retirement money, you basically have access to traditional IRA or Roth IRA funds most times. That's what comes out of your 401k or 403b. Most times it ends up in an IRA. But you also have what are called taxable accounts. That's that lower left portion right there. And those are taxed annually. Sometimes taxable when you take money out, but there are 3 main places that you can go to draw your income from. So,
Mhm.
tax implication of your traditional IRA money, which is where most retirees' money lies these days, you pay your ordinary income tax rate 10, 12, 22, 24%. But with Roth IRA money or that taxable portion that we talked about, sometimes you can get some more tax efficient income coming in. So it's always just good to make sure that you have a balance between all 3.
Yeah, no, there's so much to consider, really, and a lot of proactive planning that goes into it as well. So, Nolan, if somebody would like to have this conversation with you to determine if they are tax ready for retirement, how can they reach you?
So they could call our office at 616-301-2581 or go to our website, which is cornerstone-rp.com, and you can just ask a question at the bottom of the contact us box homepage.
Great. Nolan, thank you.
Thanks, Erin.